Here are 4 ways to use consolidation phases to improve your trading in any time frame. I use the 1 minute chart because we have 60 candles within 1 hour, but it works also in other markets and also other time frames. So first of all, when we have a lot of candles, it just shows us where the market likes to be because we have time, we have volume, and we have price. Usually when you have candles, you cannot see too much how much volume was being traded. You need to pay for that trading on an exchange. It is mostly that is replicated, but it's not a big problem because when seeing consolidation phase that there are a lot of candles, you can see that the market wanted to trade on this price area. Just if it's higher in reference than last week or yesterday or lower, that it wanted to trade with more time, and more time mostly means also more volume. And this is also acceptance that the market wants to continue trading in that direction. So when we have a consolidation phase, the first thing is that a consolidation phase can be a no trading area. If they're small and spiky, we make mostly in trading money when the market goes in a one-sided direction. And when you can see that the market is, for example, in this picture here, in this area inside, and this is, by the way, we're talking about your 2 trading days here, what you can see here, 1 or 2 trading days. This is absolutely not nice to trade because the market is aiming always for bigger structure highs and bigger structure lows. And you see here how the market starting here on X is aiming for this low, is aiming for this high. And now check this out. The market is not able to reach this low here again, where my circle is. And the market is also not able to reach this high here, as you can see here on this area here. So trading here inside makes not that much sense anymore. For this, we have this consolidation phase. Some people draw it in like that. Some other people that draw it in just like tiny like this and just draw it into the right. However you want to draw it in, it's just like that you are aware of it, that those areas we find less qualitative trades because the market is not pushing enough and targeting this bigger structure highs and lows, or even smaller structure highs and lows, that the market is not reaching it well. The second method is literally that we use the consolidation phases as magnets. That means when you see that the market is going down, for example, and you see here it had here a lot of trading time here, this means the market likes to shift more down. This is actually good if you have a consolidation phase. If you see the market is trending down, consolidation phase, that the market continues to push down. It depends now how many red candles do we have here. Is the consolidation flat, or do you see really that the consolidation goes down like this? Do you see that the consolidation first is flat, goes a bit up, and then starting here, the market starts to make the consolidation phase like this one trending down? Those consolidation phases are very nice to trade. It's just we use an indicator that is called the anchored VWAP, and this indicator helps us to identify how big the retracements are by placing this indicator on the bigger structure high. And then once it's cutting down, we know exactly that we more concentrate with the stop placement up here, that up here it makes more sense to trade than down here for trading red candles, color switches, and so on. To use it also as a magnet, and this is something what I really love, is that if the market pushes out, this is what you see here with the trader. He took a trade here, or he was analyzing here something. Here, for example, he took a trade. And you can see here on the left side how the market is pushing down, does this consolidation phase. It goes flat in this case, so this is not good to trade. First here you see a bit that it goes down like this, but it's too late because here we have more green than red candles. It's pushing too much up, like it's done. If here would be like a lot of red candles, it would make sense to continue trading down here, but that was already it. Like those consolidation phases are just dangerous to trade, and you will see it over and over with experience. You see on the right side, you can draw it into the consolidation phase either like this, because it's small, or you can draw it in like this big, how the trader did. And what the trader did, he used it as a magnet, selling, as you see here, because you see in average, the market does a specific move in retracement, it's called. That means from here to here, the market does those retracements. And that just shows us that the trader is not selling down here. What is good, he waits until the market comes back, until the market does a red candle. In this case, he was using this 1 minute trading strategy. We used the anchored VWAP. He had, as you see here, a color switch that was above here. And when having enough leverage, trading futures and adjusting $100, if the market goes against us, we lose $100, but the market, if it goes in our direction, we make $500, $800, $900. In this case, it would be $683. Sadly, the trader didn't do the re-entry, it's called, because it was just spiking after the red candle shortly up, and then it was going down. The trader should have done, I think, a re-entry.